All right, thanks, Joe. So, welcome everyone, and thank you for joining us for today's webinar on funding strategies for broadband expansion. My name is Shapur Zadyar. I'm the lead funding analyst at Calix, and I have the pleasure of moderating this amazing session. Now, broadband providers across the country are at a pivotal moment. Historic levels of public funding through the BEAD program and others are creating new opportunities, but also some challenges as well. Securing the right mix of funding, whether private equity, venture capital, loans, or public grants, is crucial for not only growing your business, but also strengthening the communities you serve. At Calix, we've had the privilege of working with hundreds of broadband providers to navigate this landscape, helping them leverage private investment as a catalyst to unlock public funding and accelerate their growth. So today we've brought together a panel of industry-leading experts who specialize in broadband funding. They'll share their insights on how to evaluate different funding sources, structure financing to maximize impact, and deploy capital effectively to support both business expansion and also community initiatives as well. So before we begin with introductions, I just want to make a quick PSA. We're all here today to benefit you all in our audience. So please, at any point in time, feel free to ask your questions directly to our panelists and we'll be sure to address them. So now on that note, let's launch a quick poll question to the crowd to understand our audience a little bit more. So Joe, would you mind throwing up the first poll question here? So really, what is your biggest challenge in securing funding? Is it meeting matching fund requirements for public grants, understanding different financing options, attracting investors or lenders to your project, or managing financial sustainability after securing funding? Excuse me. Seconds here.
Already, give them 5 more seconds, then we'll close the poll. Thank you, thank you.
All righty, attracting investors, lenders to your project. Okay, so that seems to be the priority. Perfect, thank you for that. And following this, one more poll question for you before we kick off the conversation here. So that's going to be poll question number 2. When seeking funding, what's your top priority? Are you looking for the lowest cost of capital, maintaining ownership or control of your company, speed and ease of securing funds, or strategic guidance from investors and lenders? Here. All right, I think we should be good. All right, maintaining ownership and control. Yep, figured that was going to be at the top. All right, cool. Thank you very much for that insight. So to kick things off, I'd first like to thank all of our panelists for participating. Private investors like yourselves play a key role in broadband expansion and quite often provide the capital that bridges gaps in public funding. So I'd like to pass the stage over to you all first to introduce yourselves, the company you work for, and how you approach broadband investments. So starting from left to right, let's start off with Alejandro. Or sorry, yeah, go ahead, Alejandro. Oh, can't hear you. Nope.
Can you hear me now?
Sure can.
Yes, here. Great.
You want to start with me, Kevin, or?
If you can hear me, I'm happy to go.
Go ahead.
Okay. My name is Alejandro Batista. I'm a managing director at Searchlight Capital Partners, and I help lead the firm's digital infrastructure investing business. The way we and I'll keep it brief just so we can continue the dialogue here, but the way we approach investments in broadband is really through 2 main ways. The one way is we've acquired kind of copper assets and have sought to overbuild them with fiber after we buy them. And then the second approach in broad terms is in rural markets where we can leverage subsidy funding to build in areas that are, currently not being serve with broadband. So those are the two main areas that we spend our time investing in.
Jake, you want to go ahead?
Yeah, sure. Thank you. Hi, I'm Jake Tarr with Kinetic Ventures. Excuse me. And we're investing out of our Broadband Opportunity Fund, and we're 100% focused on companies building high-speed internet into rural markets, underserved communities, taking advantage of the grant programs. Thank you.
All right. Go ahead, Abbas.
And I'm Kevin Oliver. Oh, sorry, go ahead.
No worries. Go ahead. Go ahead.
Okay, I'm Kevin Oliver. I work as a managing director for CoBank. CoBank, we're about a $200 billion agriculture and rural infrastructure bank. We probably provide, I'm sure, over 60% of the letters of credit that back programs such as RDOF and CAF2 awards, even back to the, the NTIA BEAD and BIP grants. We specialize in financing rural infrastructure, particularly in the communication space. And so looking forward to having a conversation today.
Yeah, hi, my name is Abbas Hassan. I'm principal at Grain Management. We are a private equity fund that is focused exclusively on the digital infrastructure sector, which incorporates broadband infrastructure. We have 6 portfolio companies across the US in fiber assets. I'd say our approach has been to, traditionally working with founder-led or family-owned businesses. A few examples of these include Ritter, Great Plains, 123net. We view these businesses being particularly attractive because they have a local orientation, they know their markets well, have deep roots in the community, and we look to build upon that in our investments. As to me in particular, I focus on non-control investments in the firm.
Nice. All right. Thank you, everybody. All right, so let's hop right into this discussion here. So we all know secured funding is a crucial step, right? But it's not just about finding capital. It's about approaching the process strategically, right? So some providers make mistakes that can delay or even derail their efforts. So Jake, Alejandro, from your perspective, what are the biggest mistakes broadband providers make when seeking funding, and how can they avoid them?
Yeah, I think one thing that is often or not really focused on by some companies that I'd like to say not all capital providers are created equal. Capital is in itself a commodity, but areas where I've seen mistakes is that companies tend to go for maybe the fastest, cheapest cost of capital, and not with an investor that has the deep kind of knowledge and sector expertise. And so oftentimes doing that, you may see some maybe short-term benefit on the cost of capital, but ultimately long-term, may not be optimizing or maximizing for value. And I think and we'll talk about this more later, but when going out to avoid some of these mistakes, just make sure you kind of partner or look for partners that have a track record investing in broadband, that understand the unit economics, that understand the challenges and opportunities that your business sees, knowing that you're the operator, you know best how to operate your company, and the investor's a financial investor, but nonetheless, having the experience in the space and having lived through similar situations, I think certainly pays its dividends later on.
Thanks, Alejandro. So, Shapur, Kinetic, we're investing in companies that probably, maybe in some cases, less mature than Alejandro and Abbas. And so many times they have not gone out for capital before. We're often the first institutional capital. And the advice I would give is that try to be as fully prepared for the conversation when you initiate it because there's a cadence to the process. And if you can keep that cadence moving along, if you have a complete data room that will address many of the questions that an investor is likely to ask, that will help you a great deal. And I think it occurs to me you could even call up a handful of investors and introduce yourself and tell them that you're thinking about raising capital, and find out what are the kind of things they would like to see when you come to market, right? So they'll basically give you the answers so you can prepare your data room and then come into market fully prepared. And you can also learn from that what we really pay attention to. And in our case, we're going to look very carefully at your track record, because the track record is going to recommend you. It's going to tell us what you're going to do in the future. We've seen some operators who have already won grants, and they're so focused on the next grant that they forget to actually acquire the subscribers once they built their network. They're trying to get to the next grant, and we're going to really want to see that you can populate your network. And then lastly, show us that you really understand the economics of the grants, because what we're going to pay attention to again is what's the net cost per passing, right? How much do we all have to put in per passing to build this business? Thank you, Shapur.
Thank you. No, that's great insight on what to avoid. I I usually like to start off with those questions because it's best to understand what the common mistakes are before you setting out a plan, because you're eventually going to probably run into them yourselves, right? So better to know them, understand them now, so that while you're starting off your plan and your pursuit of capital, rather, it's a little bit more easier to identify what to avoid. So thank you for that. So now let's talk about, and I know we're going to touch on some of the metrics in a bit, but let's talk about what investors and lenders are looking for in a broadband provider. So Abbas, starting with you and then Kevin, what financial metrics and operational factors are most critical when you're evaluating a potential investment?
Yeah, I mean, I think Jake touched on some good points. I mean, as a starting point, we're looking for track record, right? So the capacity for the business to historically have been able to build assets and monetize those assets on a consistent basis gives us the confidence that there's a capacity to continue doing that going forward. You know, and then on top of that, we're looking for you know, what work have you done around the unit economics around the build that you're expecting to do on a prospective basis. You know, does the competitive intensity seem attractive? Are you going to be able to achieve your cost per passing targets? And do you have the capability in-house to convert those subscribers into revenue earning units? You know, ultimately, the thing to keep in mind is that, you know, investors like us are always going to be focused on what's the path to free cash flow, and can we are we going to be able to earn a return on the investment that we're making based on that, and to have a reasonable expectation that we're going to be able to get there.
Anything to add, Kevin?
Yeah, I would just piggyback on that. You know, we definitely look at the track record of the management team and the equity sponsor when we look to do debt financing. We are cash flow lenders, but you know, we are unusual in the sense that we will take you know, grant funded what we would view as cash flow, particularly when it's recurring on a monthly basis, and we're able to lever that to some degree. Now, again, we're focusing on, you know, the execution, and you know, ultimately you're going to need to be able to get the penetration rates that, you know, you forecast, so that you can turn sort of the government subsidy cash flow, for lack of better terminology, into customer cash flow, right? You know, because that's ultimately what's going to service and repay our loan. And I would just piggyback on that last question. You know, one of the things we see that's a mistake for some of the providers seeking financing to execute on these rural broadband projects is just waiting. You know, as soon as you even think you might be able to get an award, or you're looking at a broadband project, you should really not only start contacting, if you think you're going to need equity, an equity provider, but also a debt provider. And I think it was, as Alejandro said, you really want a provider that is in this space and has expertise in this space and understands, what it's going to take from a letter of credit issuance standard to get what the government is going to need for you to execute on your plan, and also really understands, what it takes to execute and build fiber projects, particularly in rural areas.
Got it. All right, thank you. Appreciate that insight. So going back to the key metrics, free cash flow is definitely one that's at the top of the list. Are there any other, KPIs or metrics that providers should be tracking proactively before they approach you all? So for anyone.
I mean, I would add. Oh, go ahead, Kevin.
Yeah, I was going to say, as I said before, penetration, rates are a really good metric for us. One of my providers, they actually will have sort of a diagram that shows, as they build out fiber, here are the nodes in their network. This is how long they've been there, and this is the penetration rate they expect it to achieve, and this is the penetration rate they're actually achieving. I mean, that's a really powerful matrix for us.
I was gonna add. I mean, Jake mentioned the net cost per pass, and then on top of that, it's for us. It's like market structure, right? Like ultimately, your ability to get the right penetration is a lot of it is related to who your competitors are and how many providers you're competing against in a particular market. So, keeping track of the market structure, how we call it, whether you're competing with, copper only or competing with another fiber provider or cable, at the aggregate level, how that looks for your company is important.
Got it. All right, thank you for that. So, all right, let's take a different look at things, right? So larger providers, they often have an easier time securing funding, I guess, kind of due to their scale and their track record, right? But for smaller broadband providers, the challenge is a little bit different, right? So I'm curious, from the venture capital side and from the banking side, Jake and Kevin, how would you suggest a provider position themselves, a smaller provider to position themselves to attract investment and make themselves a little bit more attractive to folks like yourselves?
Thank you, Shapur. I think it's going to be along the same themes that we already described. And that is, you're talking about a smaller provider again, and maybe an operator who has not come to the market before. So I think just as much preparation before entering the market is a good idea. And even just learning from a few investors. I mean, I can tell you, everybody on this panel, nothing gets them going more than when an operator calls up and says, I'm going to be in the market, right? And let's have a conversation, and doesn't share a lot of information, right? So I think you can learn a lot, and that'll get us interested, and we'll be looking forward to getting that information from the operator. And I think just look at your weaknesses, because we all have weaknesses, and figure out how you intend to address those over time, right? Chances are your management team is not complete. You know that. Figure out where you're going to slot those people in, and just be prepared to address all those opportunities. And of course, have a good articulation of how you're going to grow. And it has already been said what your competitive environment is. We're primarily focused on the rural markets where you're winning a grant, so because you won't really have a fiber competitor, but really have that thought through.
Yeah, I really like how you brought up the weaknesses part, right? Because I feel like a lot of folks when we meet with investors, sometimes they tend to bury some of those in the details, right? But I feel like honesty in this situation is probably the best option, because little do they know, or investors like yourself not only bring the financial aspect to it, but also some of the consultation, like kind of the managerial expertise as well. So I really like how you brought that up. Kevin, would you have anything to add? So got you, Kevin?
Yeah, I would say that, you know, can you guys hear me?
Yeah, we can hear you.
Can you hear me? Okay. I would say that one thing providers need to understand is, in the marketplace, there's a certain level of your capitalization that we view as debt holder risk, and a certain part that is equity holder risk. And depending on, how large you are, your cash flow, length of time in this business, how, it would really determine on that spectrum where you as a provider would fall out. In addition, the type of business you operate, whether it's a fiber business, a fixed wireless business, or a hybrid where you have some fixed wireless, some fiber, maybe coax, maybe cable. And so, for us as a bank, we really look at and say, okay, we look at your business and determine what's an appropriate leverage for that business. And we, that may be 3 times, it may be 4 times. If you're a highly penetrated fiber provider, it could be, upwards to 6 times. And then, the provider needs to understand, like, maybe you can talk to us and find out where we would be comfortable on that leverage curve for your business, and then determine, at that point, you would then know what we would view as the equity holder risk in a transaction. Many times, providers come to us for debt, and many times we have to tell them, the profile, the capitalization profile you're looking for really calls for equity, right? And then I have to refer them to, Jake or, Alejandro or Abbas. So I think that's really, what providers need to understand. It's like, okay,
Got it.
what is the amount I can truly put on as debt?
Yeah.
So I would just add, I mean, from our perspective, we are increasingly looking at sort of non-control
Yep.
investments into businesses that are kind of at the earlier stage of their path. I think, the advice that I would give is to have a really targeted plan of what you expect to do. What is it that you're trying to do that's differentiated from other folks out there, and don't try to be in every market and try to get as many of the grants as you can. I mean, really try to focus on what assets do you have in the ground today, and how is that going to give you a leg up by being able to win this grant and convert it. Those are the type of situations that to us come across as being really attractive off the right out of the gate.
All right. Alejandro, would you have anything to add to that?
No, I wouldn't. And I would, what comes to mind, I would stress that, someone mentioned it before, probably Kevin, I think it was, like, don't wait till last minute to raise the capital. Like, windows for capital raising, open and close for reasons that may not be under your control. And so many times kind of we've seen that, some owners wait to kind of optimize for the ideal time to raise capital, and oftentimes those windows kind of go, and they're not able to secure the financing they need. And so, yeah, it's preferable to raise it early than not at all, I'd say.
Yeah, I definitely think that's a really key thing to consider, especially everything going around with the whole public funding landscape and all this speculation about the whole BEAD program and the whole pause situation going on. I think now is really the perfect time to really start exploring your options across the private funding market, because there's one thing I really heard about that I really liked is private funding doesn't necessarily have an application deadline as some of the public grants would, right? your pursuit for capital is really just, it's pretty much how much effort you want to put into it and how much time you want to look into pursuing it, right? It's always available for you to go out there, and now is really the perfect time to start planning out what those investments may look like and what some of those match capital and letter of credit requirements would be. So thank you for that. Let's hop into one more poll question here, poll question number 3. So this is where we get a little bit more detailed into it. So how comfortable are you with blending private and public funding for broadband projects? Have you guys done this in the past? Has it been successful? Are you still kind of learning how to structure it? Not comfortable? Haven't considered it yet? What's your guys' experience with this? Right. So comfortable, still learning how to structure it, takes the win. Okay. And very comfortable, already done successfully. All right, perfect. Thank you for that. All right, so yeah, we've talked about private funding, but many providers are also looking at public funding sources like BEAD, Reconnect, and some of the others. So a key question is really how private capital interacts with government grants. How flexible are investors when it comes to working alongside government funding, and are there any specific concerns about tying money to public programs? Any thoughts on that, Abbas and Alejandro?
Yeah, I mean, I would say our portfolio companies, just about all of them, have some component of public funding, and so we're quite comfortable with that. We see it as a pretty attractive way to drive revenue, and you know, in a manner that you don't have competition, and so you know, it's a steady stream of income in certain cases, and then on top of that, you know, once you have the network in the ground, you can leverage that to kind of grow your business in other ways as well. So we find it really attractive. I think the key is, you know, knowing how to underwrite it on the front end. You know, many of these programs require, you know, some form of match funding or other form of financing up front, or alternatively, you know, build requirements and things like that, where you have to build to a certain capacity within a certain time frame. And so you really have to understand all of the liabilities you're taking on when you accept that type of funding. But you know, we think it's a huge value add part of the mix for these businesses.
Yeah, I agree with Abbas. I mean, this goes back to the point around like doing it, you know, finding an investor that understands your business. And, you know, first thing is, you know, having an investor that understands, you know, rural fiber broadband. And then within that, it's like, okay, let me find an investor that can understand the risks associated with grants, which we view as, there's 2 components to that. One is kind of like pre-award, right, where you're having an investor take award risk, meaning that, you know, they're able to underwrite some win rate of applications, right? That's one kind of capability for an investor. Certainly not all investors are willing to do that. And then, and at Searchlight we are. And then the other piece of it is post-award, right? Like if you're looking for investments or looking to raise capital post-award, then, you know, to Abbas's point, there's risk associated with, you know, obviously meeting the requirements of the awards, et cetera. So it all kind of goes back to making sure you're aligning yourself with an investor that understands these nuances. We have in Searchlight, we have 5 portfolio companies in the U.S. that do fiber to the home, and all of them are involved in the grant process. And specifically for 3 of them, we underwrote our ability to win grants. So it's been a pre-award basis. So, you know, that gives our investment, when I go to investment committee with an opportunity that involves or is centered or is focused on awards, there's a very quick reaction and understanding of what the risk reward is. That is, you know, it's really, it takes years and iterations as an institution to build around opportunities that, so again, it goes back to aligning yourself with someone that kind of knows the nuances around the risk reward here.
Got it. So you guys brought up matching capital, right? So I know a lot of folks, BEAD requires 25% match, and a lot of folks may not have access to that sort of capital for the program. So is there any particular way you would recommend structuring a deal when it comes to matching requirements for BEAD? Any tips or tricks when it comes to that, or?
I mean, I think every situation is unique. It depends a lot on the assets that are in the ground when you're approaching it. I think the way that the BEAD program is structured is the government reimburses you after you build a certain amount of the infrastructure, and so you have to be able to fund that build out up front, and then you kind of get the reimbursement on the back end. So it's a little bit of it's almost like a working capital type of facility in the initial stages, and so you have to be able to create a structure that accommodates that. And so, and then you have to pair it with potentially with an LC type of funding as well on the front end. And so like as an investor, you're looking at, if you're going to take on that risk, it's a combination of what are the existing assets in the ground, and then also what's the attractiveness of the build play. The complication of it is that you don't know which bids you're going to win, right? So you make a bunch of you throw in a bunch of proposals, and you're not going to, you'll get awarded some subset of those. And so you have to be, flexible enough to be able to adapt to what actually comes through.
The other thing I would add is, as you think about structuring these types of transactions, is like we see a benefit. It takes time to raise capital. It takes time. It's time and resource intensive for companies to go out to market and raise capital, and it's helpful. We find it often for companies, it's helpful to do that, once, and cover like a multi-year type period, so you don't have to be going to market very frequently, and doing it with someone that can provide, Abbas mentioned it, like a letter of credit support, whether it's the debt or if it's at the fund level, like we provide, so that you don't have to be, talking to a bunch of people for different things that you need. We find it helpful to go to a one-stop shop that can help you kind of with your capital providers. And if it's an equity provider like Searchlight is, we can also, we have relationships with lenders like Kevin and others that we can bring to bear as well to kind of bring both the equity in Searchlight, but also the debt capital from one of our partners.
Before, one thing I would add to this, because I would imagine many on this call may be in states that haven't completed their BEAD process yet, and they're thinking it through. One thing that Kinetic has been willing to do is to provide support letters indicating to the granting authority that, we would intend to provide capital to the company were they successful in winning their grant. And I think that can help quite a bit on the front end for the process. We haven't put the capital in yet, so in the scenario where the operator wins less grants than they thought they were, or wins more grants than they thought they were going to, there's a flexibility to kind of toggle up or down their capital, because like Abbas, Kinetic is primarily a minority investor. We typically don't take control positions, so we understand from the entrepreneur's point of view, they really want to maintain that control and not take more equity than they need to until the right time.
Yeah, that's really good to know.
Yeah, and just to piggyback on what everyone else said, when you're looking at a bank that may help you with the letters of credit that may be needed, or with your match, you really want to choose an institution that kind of knows the space. So many times, I've had folks come to us and, they have great relationships with a local bank, but that regional or local bank really doesn't understand this space. And so when, they're looking to provide, the LC, they don't have the correct WISE rating. Most people don't even know what that is. And, you know, when they're actually doing the build out and going through the documentation, a lot of banks don't understand, you know, the first lien you have to give to the grant awardee. And so just knowing those aspects helps to speed the process in getting your project done.
Sure. Well, thank you. That was great insight. Alejandro, you brought up one key thing that I wanted to circle back on about the one-stop shop, right? So, with a lot of these firms or providers out there, they're pursuing multiple streams of capital, right? So, blending multiple funding sources, whether it be private, public, debt, whatever, right? So that managing all those funds can be pretty complex, right? So, do you have any advice for BSPs that are kind of navigating this complexity and trying to meet like KPIs for their grant projects or for their private investments, and how would you suggest they maintaining their financial sustainability while pursuing all these different sources? Because I know from some stories it can get pretty hectic at times, so I'd be curious to hear.
I'd say two things. The first one is kind of just logistically, if you're going to go raise funding, you know, if you want it, there's several ways you can do it, but if you can do it with a provider that, you know, again, I'll give you an example for one of our investments, right? Like, so we're first institutional dollar into a company, and we're in the equity, and they're very levered to subsidies. So they're going to be pursuing subsidies. So we're able to provide, you know, initially we, you know, acquired a stake in the company and provided a commitment to fund, you know, $300 million, right, over time. So that kind of de-risks the future-looking equity funding. At the same time, we provided letters of credit from our fund to be able to meet the requirements for the subsidies, and then also we ran their debt financing process, right? And so you know, post close, you have a company that has a deep equity financing bench, and then has a debt facility as well in place that has also undrawn capacity. So you have both debt and equity undrawn, ready to go, and then you also have the letter of credit piece. So that, you know, that helps alleviate some of the pains around going to market to raise capital. And that's point number one. And point number two around you know, what should they focus on to maintain financial sustainability and all that. Ultimately, I would be laser focused on the unit economics, right? Like, ultimately, your business will be successful and financially successful if what you're building is done in areas that are attractive from a competitive dynamic, and if you're building it at levels from a net cost per pass that are sustainable, and then you're not spending too much money on marketing, et cetera, to get the right ARPU. And so everything else is kind of noise. So besides, if you can just simplify the financing, the capital structure piece, you know, get a one-stop shop if you can, or not, find a way to kind of, so that not take your whole day basically, and then focus entirely on unit economics for your business, then I think you have the recipe for being successful in that business.
Yeah, thank you. Anyone else like to add anything? All righty. Well, cool. So, all right. So beyond financial returns, right? Broadband investments can have a pretty big impact on communities as well, right? As we all know. So enabling education, economic development, public safety, and so much more, right? So would you say, do investors and lenders factor in social impact when making their funding decision, or is it purely just about financial performance? And I would like to hear all your opinions on that.
I mean, I can go first. Oh, sorry, go ahead.
Go ahead.
Okay, well, from Kinetic's point of view, we feel like the grants, in essence, capture the social impact, right? That's why the grants are in existence. Right? That's why they're being offered, because they recognize that there are communities that lack high-speed internet. There's lots of evidence that shows that rural communities, when they get high-speed internet, standardized test scores go up, graduation rates go up, economic opportunity improves. There are many counties that don't have a hospital, people having to drive a couple of counties just to see a doctor. That can be replaced with telemedicine. So I think that's all wrapped in the grant. And then the grant, if it's properly negotiated by the entrepreneur, it leaves the net cost per passing that we referenced before at a level that makes it very attractive economically for private capital to come in. So I'll just leave it at that.
Yeah, so I was gonna say that, we view it as pretty central to our mission. I mean, all we really do is digital infra, and we have a particular focus on broadband. And so we see the impact of providing this kind of access in local communities as being a pretty critical part of what we do. But I think it makes sense as a business matter as well. I mean, as I mentioned previously, a lot of our platform investments are in local family-owned businesses, or have been family-owned businesses, and been pillars of the community for, in some cases up to 100 years in those markets. And so, from our perspective, that creates certain advantages in terms of loyalty and customer retention, things like that. And so, and we think that so it makes good business sense, but it's also, a pretty critical part of, being part of these communities. And so anyway.
Yeah, I would say in regards to CoBank, we are a rural infrastructure bank. And so, when we look at transactions, we ultimately look at, what's the rural impact, the benefit to rural communities, particularly when it comes to, expanding broadband, and providing what we view as an economic boost to those communities. And so, when we look at a deal, we ultimately look at the financial matrix and look at the forecasts and projections to make sure it's a good loan. But we also look at, how is this going to impact the community that this broadband service provider is going to serve. And, there's times where we'll stretch because we know it's going to be pretty positive for that rural community.
Got it. Yeah, no, that sounds really good. I would really like to hear that, actually, because it kind of ties back to the whole BEAD conversation, right? So under the BEAD program, there's particular points that are settled or that are awarded for providers that provide a specific number of letters of support, right? So these letters of support can come from your community anchor institutions, your local responders, and just kind of your local community in general. So I think by deploying services like that community-wide Wi-Fi to gain those letters of support, although there's only a limited number of points that can be awarded, it seems like subconsciously that's still going to be on the thoughts of a lot of BEAD scores and a lot of investors like yourselves as well when you're making that decision. So that's really great to hear. So we're coming up with 15 minutes left for our webinar here. Again, I would like to encourage the crowd to please ask any questions that you have while we have all of these panelists up on stage. And with that, so it's been a really fantastic discussion, everybody. So we've covered a lot of ground here. Now, before to wrap things up with you a little bit, I'd love to hear kind of one key takeaway or one piece of advice from each of you, whether it's advice or insight on broadband providers that are looking to secure funding, or just general advice for them in their pursuit of capital and broadband expansion. Who wants to go first? Go for it, Jake.
Give us a call. we like to meet everyone. We really do. The stories, the origin stories of these operators in rural America are always amazing to hear. and the plans for growth are inspiring. So give us a call. There's not an operator too small for us to talk to. We're eager to meet you.
Yeah, so I would say as you go out in your journey, be very targeted. Be very focused in terms of what your plan is and how you're going to achieve it. Do the homework ahead of time. And similar to Jake, I mean, we're very much open to speaking to just about anyone within reason. We've talked to a lot of folks who are kind of just starting out on the journey, and sometimes it's not the right fit, but it's a good basis for an initial conversation. We have lots of folks in our network, on the operations side in terms of sourcing equipment and whatever else that oftentimes we can be helpful, even if we can't get there on the capital side. And so definitely would encourage folks to reach out, and we think it's an exciting space, and there's clearly a lot of opportunity over the next few years. So looking forward to meeting some of the folks on the call.
Yeah, I can go next. I would reiterate, don't hesitate to give us a call. We'd love to talk to companies of whatever size. Back, done very small tickets, and we've done very large ones too. So there's no, from a size perspective, we're very flexible. And then my piece of advice is when you go out and raise money, think of, try not to solve, unless there's like some specific reason, but try not to solve for like the immediate or like the next year or so. Like, think about where you want your business to go in 5 years. It sounds cheesy, but like, think big, because I think, if you take a step back and give some thought to where you want this business to be over, 5+ years, then I think if you go to investors with that vision, then I think investors will be able to better solve for what you really want from a capital solution perspective. So yeah, that would be my piece of advice.
And lastly, I would say definitely give us a call, and don't wait. As soon as you're starting to think about these things, start giving people a call. If you're looking to do something that's transformational, that's really big, don't just think debt provider, think debt and equity provider. We work with all of these equity providers on the call, and they're great partners to have. And give both entities a call. And when you're looking at a debt provider, focus on one that kind of knows this space, and that'll help you out greatly. I'll just leave it at
All right, thank you, gentlemen. So we do have one question here. I'm not sure if you guys can see them, but I'll read it out here, and whoever wants to answer, just jump in. So this is from Steven. So we currently operate several municipal broadband networks under P3 contracts with a revenue share model. Though we don't yet own any infrastructure ourselves, our goal is to use these networks as anchor points and pursue funding, potentially including BEAD, to expand into surrounding towns. What's the best way to approach finding the right funding partner for this kind of hybrid public-private expansion model?
I'm happy to go first. I mean, give us a call. Like, I know what you mean around the P3 structure, and I'm actually having a conversation with a company that has a similar situation to yours. So yeah, I'd say the takeaway from the call is, don't hesitate to kick it around with us, and we'll, if it doesn't work for us, then we are all, we have a large ecosystem of partners and fellow investors that if it doesn't work for me, it may work for Jake, or it may work for us, or it may work for Kevin. And I think don't hesitate to start those conversations and start getting some feedback from market participants and investors.
I would agree with that. This is an interesting opportunity that's being described here, and it's in the details, right? We'd want to know, maybe you've got a great access or right to use their network that you can, in some ways, synthetically consider your network that'll bring down your cost for passing for the opportunities you're pursuing. We'd love to hear about it. That's it for me.
All right. Do you have something to add, Abbas?
No, I mean, I think I think similar to what other folks have said. I mean, I think I think we would look at it in terms of, what assets do you have today in terms of the access rights, and then, earnings that you're generating, and then look at that as a basis to jump off for these growth areas, and what leverage that can give you. So it sounds interesting for sure.
So it sounds like we really got to start getting a little bit more greater into the details to really